morning, good afternoon, good evening, traders from across the globe. Welcome to the 748th installment of Short-Term Trading Live with Oscar. This video is being filmed on Tuesday night for Trading Wednesday. That is June 29, 2011. Traders on the board, a green Omni, just like we had for Tuesday, baby. Yeah, you gotta love the green Omnis. What's going on here? Well, first thing that's going on is we know that futures trading is extremely risky and can cause substantial financial loss. If you do not have risk capital to lose, you should not be in this arena. Always use stops, always place them first. For you traders that understand those rules, right here on the board, we got some things we need to speak about. The leader of U.S. indices, the Dow Jones Transportation Average, is pulling the U.S. indices higher. Pulling ES higher, pulling NASDAQ higher, the Russell's moving higher, the Dow Jones Industrial Average moving higher. I did a class at my site on Monday and Tuesday. No, actually the class was Tuesday, and we pointed out a couple of things to them. And we did point out that we were getting the turnaround and we were going to get long for Tuesday. That worked out for us. We also discussed bonds, and that in a class held at my site on Tuesday, the bonds looked like they were getting toppy. And in fact, by Tuesday's close, the 10-year notes left a wonderful swing day, and the bonds themselves put in a reversal day. And what happened? The markets pulled back on Tuesday. So the analysis that we looked at in our classes Monday and or Tuesday has been panning out. The Omni was able to identify very, very precisely Tuesday's low in the S&P, where our Omniacs got long and rode it all the way up to 1293. It bought 1271s and rode them up to 1293. So my point behind that is the analysis is working really well right now. During this week, the thing about this week is we know to have caution. Market reversals should come our way this week at some point. 3-day holiday weekends usually bring with them market reversals on the week leading into that 3-day holiday weekend. This weekend is July 4th holiday weekend. We are closed on Monday, so it's a Saturday, Sunday, Monday, 3-day weekend. It's a big celebrated weekend here in the United States. And what usually happens during this week is you do get market reversals, which means if you were in a market that had a bullish trend, it reverses and goes bearish. If you were in a bearish market, it reverses and goes bullish. That tends to happen during this week. However, we don't expect to see any of that until a little bit later in the week. Traders, Omni does not trade past Wednesday because of the 3-day holiday weekend and the caution about market reversals. I've been doing this 29 years. I know that these reversals come, and I step off after Wednesday. So after tomorrow's trading, or today if you're watching the video on Wednesday, after today, Omni shuts down until we get back from the 4th of July. But we do have trades that we're going to discuss. And those trades are in the U.S. indices, and we think they're going higher. Now, traders, here's something that anybody who's an Omniac that's been hanging around me or the Omni Trading Academy long enough knows this. I have given unequivocal proof that fundamentals always come out in the charts first. What's the big fundamental tomorrow? We are having our vote in Greece. Greece is voting. We'll see what happens. The austerity vote, what you would imagine is that, of course, it's going to be passed. They're not going to let themselves hang, and I think the markets are reacting to that. Fundamentals always come out in the charts first. The report on whether or not austerity gets passed comes out tomorrow morning. It's up to you to decide whether or not you believe in technical analysis. We have trades that are set up in the indices to get us in. Doesn't matter what's going on with Greece. We trade the chart. The chart pattern says go, and we're going to go. So if you're willing to take the Omni recommendation that's coming out Tuesday night for Wednesday's trading, make sure that you put the news out of your mind. The news is meaningless. The other side of that is we always have a stop. We always have a trade so that there's an order placed, and if the trade goes wrong, it knocks us out of the market. We place that stop first. So even if there is a bad fundamental that's not in the charts for some crazy reason, we have stop protection orders. So don't worry about the fundamentals. Just follow the chart patterns and see where we end up tomorrow. Traders, before we go any further, I want to show you the charts that have caught my attention. So take a look at this chart right here and tell me what you think. So what do you think when you see a chart like that, traders? You must recognize that this is a bull flag. We broke out of the bull flag. This right here is the 200 bar moving average. It is very closely watched by fund managers, traders, and the street alike. If you're in this business, you are watching the 200 bar moving average. The Dow Jones Transportation Average on a daily bar chart came down very close to it and has been building a run-up ever since. Then it built a bull flag and broke out of the bull flag. We showed this bull flag Monday in a class at the site. Then we used this bull flag to get ourselves long on Tuesday morning. So far, so good. The leader of U.S. indices looks like it is going to pull the other indices higher. So now, let's go look at those other indices and see what we got going on. Traders, Dow Jones Industrial Average Daily Bar Chart. Here's what you may notice. Whenever we have a major pullback in our otherwise bull market, whenever we have a major pullback, it seems to just grow into a parallel channel, and the day you break above that parallel channel starts a big run. Again, the next major pullback was summer last year, this time, same time as now last year. We had a pullback in a parallel fashion. As soon as the market got above the parallel channel, big run up. Here we are now, parallel channel, summertime, had a pullback, held the 200 bar moving average, and as of this moment is above that parallel channel. Likelihood is that we're getting at least another day higher in the Dow Jones Industrial Average. Next chart. Next chart is the NASDAQ September daily bar. NASDAQ absolutely has found support at the 200 bar moving average and has gotten above its parallel channel, very smartly I might add, and has very bullish indicators, and it looks like Wednesday we go higher here as well. Nice breakout and nice hold of the 200 here so far in the NASDAQ. Next on the block is the E-mini S&P daily bar chart. Once again, wonderful hold of the 200 bar moving average. Has the parallel channel in the pullback. We are now well above that parallel channel, and the market looks very smart right here, traders. So there is your E-mini S&P. This is the one everyone favors trading. This one looks like it wants to go up again on Wednesday. Let's move forward. Okay, traders, now you're looking at two of the very many technical indicators that the Dow and the Dow Jones Transportation Average have pointing straight up. This one happens to be the MACD, or Moving Average Convergence Divergence, and it is pointing straight up after it just hooked and the two averages crossed. This is a trend indicator. This shows us that at least this week so far, trend is bullish, and so should Wednesday. Up here you have the RSI, Relative Strength Index, clearly pointing straight up once again. Traders, the indicators are bullish, the pattern is bullish, the market wants to go higher. Now, the other side of this would be the bond market that's been rallying for quite some time. The bond market suddenly, as of Tuesday, shows us that it wants to break down lower. We showed that in a class at the site, and I have to show you what actually happened on Tuesday. Look at this next chart. Traders, 10-year notes, September daily bar chart. This was debuted in a class at the site, and I showed everybody, look at this. We ended up with a swing day. Big, big, long parallel channel that we've been in. Ends up right here in a swing day. And I told everybody, expect what happens Tuesday is the big breakdown. That's what we got in 10-year notes. Traders, I'm going to blow this up for you so you can see it a little closer. Traders, here it is. Blown up, the same chart, 10-year notes. On Tuesday puts in a swing day. Swing day means we are going to head down. Look what happened here on Wednesday. Undeniably, it came straight down, settled by its lows, down below the parallel channel. The same day that the E-mini S&P and the Dow Jones Transportation Average decide to break out towards the upside, bonds break down. They leave a guaranteed signal that's guaranteed to be a swing day. There's no guarantee it will work, but we know it's a swing day. It does work, and it breaks below the channel. Now let's go look at the granddaddy, the bond market. Okay, traders, another chart that we looked at in class on Monday was the USU11 or the 30-year T-bond. This is a daily bar chart. What you'll notice here is you put in a reversal day on Monday. The market opened, dropped, went way lower than the day before and settled at its lows. Reversal day. What happens on Tuesday? The very same thing that we expected in the 10-year notes takes place. It drops out of the channel and all the way down to here. Very bearish indicators all the way up here at the top of this channel, plus reversal days. That bodes well for the transportation average rallying for another day. Traders, pull your charts. Make sure that you understand that. Take a look at these charts. If you don't know how to find a swing day, simply come to livewithoscar.com and allow me to teach you how to do that. So there it is, traders. That is my technical argument for why we are going to have a bullish day, why we had a bullish day Tuesday, and why the charts are calling for a bullish day on Wednesday in U.S. indices and a bearish day in bonds. Now, don't forget, a huge fundamental is coming out tomorrow about Greece. We'll see. Almost always fundamentals come out in the charts first. I'm banking on that. I never deny the analysis. If the analysis says up, we point up, and that is it. It's got nothing to do with our opinion. The analysis for tomorrow points up. I say Greece doesn't affect that motion. We'll see what happens. Traders, always remember to keep your stops out. Keep your emotions out of this thing by keeping your stops in place. We are having a free seminar here in Las Vegas, baby. Yeah. August 20th, free seminar here at the Las Vegas Marriott. Traders, we are giving out memberships. We're giving out one-year memberships to Technical Analysis Magazine. We are giving discounts on Metastock. We are giving out discounts on OMNI. So make sure you show up to our free seminar where I can teach you the tips, tricks, and techniques that I've learned down on Wall Street and I've been using for my entire career. Traders, I'll be there. I'm going to be there all day. Make sure that you come on down to our seminar. If you'd like, simply come to livewithoscar.com. Top right of the site, click the banner and register for that free seminar. There's no reason for you to not show up, traders. It's free, so come on down. All right, I'm getting out of here. Tonight happens to be my 25th wedding anniversary, traders. 25 years married to the same girl, and I still love her as much today as I did when I met her. Imagine that. So, I'm getting out of here. I'm going out to dinner to celebrate. I'll see you OMNIacs back at the site. Make sure you keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. 25 years, baby.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.